Very excited to bring in Katy Kaminski. She's a chief research strategist and portfolio manager at ASFYX Group. Katy, the fund that you guys have is up on the year. It's trouncing just about everything else we've seen here. So what are you doing right? I mean, is this just something that braces for big downside moves or what?
No, trend following strategies have long been known to be able to adapt to difficult market scenarios. I spent a lot of time researching this topic. It's something I call crisis alpha. The key point to preparing for a crisis isn't about predicting it. It's about being able to adapt to that environment to find opportunities as other investors are very polarized in the type of trends that they're moving into. We've really seen massive trends in our space in a way that has been very easy to measure. As an example, short energies has been a huge move this year. We've seen what's happened in fixed income. It's been a very interesting environment for us.
Are these stock positions that you're in? Are they bond positions? I mean, other than TLT and long-term bonds, not a lot else has worked this year.
So we trade globally across all global futures markets. That means that we have the ability to go long and short equity indices, currencies, commodities, contracts, as well as fixed income futures contracts. And what we have seen, the way that we trade is purely systematic. So we're measuring the strength of trends across all these different markets and adjusting our positioning as markets move. What's been the most interesting to me, to be honest, has been the strength of trends outside of equities prior to their losses in February. We saw tremendous moves within commodities. We saw big moves in fixed income, which almost felt as if markets were complacent going into that event. And right now, what we've actually seen is that equity markets are still down somewhat. And we're definitely very much thinking that the market hasn't bottomed, that there's no evidence yet that there's a clarity on the situation.
What do you make of stocks breezing through this horrible data the last week? It's not just today. They rallied on the first jobless claims. I mean, do we know what a sharp 30% decline, the fastest in history bear market, has prepared us for? Is the evidence not suggesting it's at least prepared us for what we've gotten so far?
Well, I think the challenge with that type of data is that the market is so uncertain right now that the timing for when that information comes into the market is still also unclear. You can imagine there's also been days where the Fed has come out and said something very positive and the markets went down. So I think this just shows how uncertainty is really at the center of markets right now. We don't really know where those trends are going to go going forward, and we just have to wait until we get more clarity.
How are you managing correlations and previous assumptions of how assets correspond to one another? We've seen them break down. We've seen gold dollar break down. That's been bubkus for like a year. Crude dollar is breaking down right now. We saw bonds and equities break down when we saw risk parity get slammed during the cash crunch. How do you have any idea how to model relationships right now?
Well, we model volatility and correlation using both daily but also intraday information that allows us to weigh off some of the changes of what's happened recently and be more reactive to new environments. So what we have seen is that short-term, especially intraday correlations, you highlighted it yourself, have really changed, especially recently. So some of these themes, the flight to safety themes, haven't played out the same way that they did in 19. It's almost as if they're a little bit tired from how fast the markets moved. Gold is a perfect example. It was behaving like a safe haven asset for a very long time. And recently, it's really been back and forth. So what we're doing is measuring, trying to incorporate new information, balancing those in a systematic process, and adjusting our position sizing to reflect how volatile markets really are.
Where's your fund exposed then, Katy? I look in 2018 during the VIX explosion. I think it's probably a term that maybe we need to revisit at this point. But you guys did get hit with the market then and turned lower. So there was something there that maybe seemed you were allocated to stocks. Clearly this time you've got a much better response, the fund here, to the pullback in equities. Can you walk me through the differences in how you're positioned?
So I wrote a paper on this last year it's called Crisis or Correction. And during a correction, what matters is where you're standing before you fall. But during a crisis, what matters is how you can adjust to those positionings. So our strategies are much more better positions for what I would call a Vollapalooza, which is a long process of lots of vol versus a volpocalypse, which was what we saw in 2018. So when there is a short-term correction, it really matters where you're standing before the Brexit, before other big one-day or short-term corrections. But in a crisis environment, systematic trend following strategies have the ability to measure and continue to adapt to find opportunities across global markets as they develop.
Katy, real quick before we let you go, I want to continue this conversation. We're running a little short on time today, though, but what's the risk right now that you see that we have another correlations to one moment like we did in early mid-March? It seems treasuries are sluggish to move on this bad data. U.S. stocks aren't exactly rallying, but the only thing that's really working right now is the dollar, which kind of heralds back to what we had a couple weeks ago. Is there risk there that we get another high correlation sell-off?
Definitely. I mean, in this type of environment, the gloves are off. Anything can happen. The most important thing to do is to be less stuck to historical views and be prepared in your portfolio to actually don't be too reliant on those long-term correlations because they are showing not to be relevant right now.
Okay, let's continue the conversation, Katy. Appreciate you joining us here. Katy Kaminski, Chief Research Strategist, giving us some insight here into ASFYX, Alpha Simplex Group. She's the Chief Research Strategist and Portfolio Manager of the fund.